Today is our 2024 housing update, and we're going to be going over some real estate investing tips for all of you guys. I hope you know who's with me. He was with me last year, Ricky Cain of the Cain Realty Group. He is one of our dedicated, experienced, and knowledgeable Austin real estate partners. On top of all that, I got to tell you guys, maybe I say this too much or emphasize it too much, rather, but Ricky's a good guy as well. So to those of you guys that are watching, that actually matters to some of us that call Austin home and are from the area. We actually care about people that do the right thing and say what they do. And I can stand behind Ricky and say he's one of those guys. So a couple of housekeeping tips before we get started today. On the right side of your screen, if you are watching with us live, there is a Q&A. So if you have a question, you're welcome to post that. More than likely, we're going to get to those at the end of the discussion today, unless it's something that is exactly on the topic we're hitting at the moment and we can catch it on the fly. But anything we cannot answer, feel free to give us your contact info and we will email you back or follow up with you afterwards. You can want to talk to Ricky, myself, or maybe we've even got a referral for you to a third-party vendor. But we're happy to do whatever we can to support you guys, to help you be successful real estate investors, and generally to help you reach your goals and dreams. Hey, who doesn't want that, right? We're all here working for it. So let's get to it. Ricky, please do us a quick introduction of yourself, your team. Tell us what we need to know about you.
Yeah, well, I'm an Aries, and so that's very important. And I started in real estate in 2006 and been blessed to now have served over 2,000 people in this market, which is pretty incredible. Started in 2006. My wife and I started a team in 2010. We actually just also were blessed to win the Austin Board of Realtors top team for our production and for giving back to our industry and community. So we sell a lot of real estate. We help people make a lot of money, but we also do it in a way that feels good, giving back to the community and making sure that our clients aren't just buying a beautiful home, but they're buying a great investment.
Spectacular. So I think the personal connection is a big thing. There's a lot of people in the business in Austin and other cities, but getting to know people and actually listening to them. What is important to you? And then after we've had that talk, what maybe have you not thought about that I should be asking you, because this is my job to lead you to pastors and not just to take what you're saying at face value and close the transaction and move on. So I think that's really important that you guys have such a personal touch with your business and stay in touch with those clients. So our video today is going to be about buying real estate investments in Austin in 2024. I feel strange saying this, and I've told everybody I can't keep saying it. This is a strange year. Every year it's, oh man, this is a strange year. Okay, no more years are strange. Every year is strange, and so I guess that's all means they're all unpredictable. We're supposed to look, people tell you to look at the past and guess at the future, and it never seems to turn out what you think it's going to be. So we're going to talk today specifically about buyer competition and inventory, what the market looks like, both of those, a strategy for you if you're going to invest in real estate, how to get started. I mean, most people in the U.S., believe it or not, the last number I heard was 83% of real estate investors are actually mom and pops. They hold 1 to 3 units. I know these institutional investors make waves and they do move some markets, but that's still not where people are. People are mom and pop, 1, 2, or 3 homes. So you can get started just like everybody else did. What outside factors are affecting the Austin housing market? Jobs, growth, political, a little bit of everything. Lord, it is an election year. Help us all if we can survive that. We've also had some changes, some positive, in the Austin area when it comes to the labor market, what's going on and what's coming up with jobs and employers in our industry. And then Ricky's going to do a good job. He dug into some things before today's call. I know he was excited that he found some great data to share with you guys about areas worthy of consideration. People call and, where should I buy? Where should I buy? And I really am excited that he's got some things to share with you today on what he sees as he does sell that many homes. So the first topic is buyer competition and inventory. What can you tell our investors, Ricky, about what you're seeing out there on a day-to-day basis? You guys are turning and burning. So what are you seeing out there?
So buyer competition inventory. Well, inventory is at a 5-year high and sales that are a 5-year low. And so from that, you can uh, obviously that means that there isn't a lot of competition out there in general. There are exceptions though. If it's a community with low inventory, what we're seeing the most is that real estate is even more hyper local than it's ever been. There are some communities where there's no inventory whatsoever. The home comes on the market. As long as it's marketed right, presented right, and priced right, it gets multiple offers. But in a majority of communities, when where inventory is high, we're seeing longer days on market. We're seeing sellers being open to negotiation on price, and what we call a rate buy down. Whether it's for an investor or for an owner occupant, it's very common now for sellers to pay for a rate buy down because it impacts the monthly payment by more than twice the amount of a price reduction. For investors that are looking for cash flow, that's really important because that rate buy down is going to impact that monthly payment more so than the reduction in principal.
When I hear some of these things that you're sharing with me, I don't know why the Buffett quote always comes to mind of, be greedy when others are fearful and vice versa. What I'm hearing you say is that the neighborhoods that are in demand are still kind of in demand, but there is some inventory for people to get.
We've been telling all of our investor clients this. Over the next few months, we will see some of the best opportunities to buy real estate that we'll probably see in the next 4 to 5 years. I tell our investor clients all the time, you can't repurchase a home for a lower price, but you can refinance it. And so now is the time to take advantage of those softer prices. However, when we get to this in this presentation, a lot of people think prices have been coming down overall. And to be honest, in some areas they are, but in a majority of areas, they're either flat or they're actually increasing, even with high interest rates. So, Matt, when the Feds decide later this year to lower rates, what do you think is going to happen?
Yeah,
The prices are going to go.
correct. There's a I don't want to call it equilibrium, but there's definitely a cause and effect to the way that markets work. And
Yeah.
typically, if something's free, you may not want it, but there is demand for Austin real estate still, which is interesting. Every news source you look at gives you one take, and then you have to wonder what those people are selling that they wrote that article for, and then because you can flip the channel and then find the next take on that news source. So it's going to be really interesting, and I agree with you completely. The interest rates are scaring a lot of people, but no one wants to have a conversation about how do we work through that? Is there a way to work through that? And then what do we do in the future with that? Well, I got to tell you, I remember back in, well, I'm dating myself now, 2005 or so, interest rates were 6%. Just broad 6%. But when you look historically, if you can get five, it's kind of a reasonable rate. We just got so spoiled. And boy, our memories are quick to forget about what the reality was before that. But the charts are all out there at least. So I do urge these investors, if you're chatting with Ricky or anybody else, talk to them about what you can do to interact with the rates. Don't just sit around and wait because, as he said, you wait and that house is going to be gone. So, one of the second topics we've got on the list today is investment strategy, how to get started. So, tell us a little bit. The first one I've got on here is how has the market changed compared to last year? Let's just start with that. That's a lot to bite off.
Quarter two, three, and four, especially quarter three and four. And remember, when we look at close data, it's a lag measure from the market 30 to 60 days before. So if you're looking at closed data from April, it's representative of the market in February and March, because the average turn time of a real estate transaction tends to be 30 to 45 days. But when we look at quarter two, three, and four, especially quarter three and four of 2023, it's kind of what it is now. It took a full quarter for buyers to kind of have that knee-jerk reaction of, oh my gosh, the rates are so high. And now it's kind of one of those things, it is what it is. When I started my real estate career, I was kind of used to rates being between 5.5% and 6%, which is what people are still able to get now with points being paid by the seller. So for me, it seems totally normal, but I get that a lot of people made some real estate transactions over the last 4 years, and they were used to getting that 3 to 4% rate, which was unheard of. So overall, I would say the market's pretty similar. When I look at from the board of realtors, the average price for a single family home in Central Texas is actually about 641,000 in April. We don't have May numbers yet; it's only June 3rd. But when I look at that number, that's up 4.2% from the same time from the data collected last year. Now, a little of it, Matt's a little deceiving. I think if we were to take out the concessions that are on the back end for sellers buying down rates for investors and for owner occupants, that number would probably be closer to 2.5 to 3%. But nonetheless, overall, the prices are still continuing to go up. And then we also saw a 2.4% increase just for the year to date data. So 4.2% from April of this year to last year, and 2.4% for year to date data from January to April.
That clarifies a lot of what we're looking at. So if we're a buyer and we need to develop a strategy and we're looking to invest in real estate, how should we proceed? What is the process that you're recommending to your clients who are investors and want to come to the table?
Well, the biggest thing, and it's going to sound self-serving, whether it's calling me or calling anyone that has a track record of working with investors, that's been around for a long time and knows which areas are great regardless of market, knows the kind of product that's going to rent the best. Make sure that you have a strategic alliance with a real estate agent like that. So that's recommendation number one. The biggest investor hack, outside of just being a traditional investor and so the sellers are actually allowed to buy your interest rates, pay 2 points towards buying an investor rate down. So that really helps. But what else I'm seeing, and even people on the team have been doing this, is they buy a property with an owner occupant rate. And then what they do is they stay in it for 12 months. Then they rent that out in conjunction with buying another property, and they're just doing that every single year. And so the reason why that's so popular now is we have the biggest discrepancy between an owner occupant rate and an investor rate that I've seen in my career. To give perspective, typically at most it was half a point difference. Now it's anywhere from 1 point to 1.25 points difference between owner occupant and investor rate, which really changes your ability to cash flow in the market. And so big house hack that we're seeing is people doing that owner occupant rate, staying it for at least 12 months, and then just continuing that process. Again, we have people who've been on the team that are doing that. I would say that's probably the most common. We're also seeing people buy duplexes and then rent out the other side. And so they're, in essence, an investor from that standpoint as well. You can even use an FHA loan and pay as low as 3 to 3.5% to buy that duplex and become an investor and have a place for yourself to own. So I would say between the duplex, you can still do that with the triplex or fourplex, but between multifamily and the house hack of staying in the property for 12 months on an owner occupant rate and then finding your next opportunity, I would say that's those are the most common strategies that we're recommending and being utilized by our investor clients.
I'm going to throw one more in there for you. And it's not separate and it's not counter to what you're doing. It's complementary. And that's if people are looking for cash flow in the long term, return on equity versus appreciation, two different plays, right? Do I think this $1 million penthouse is going to go up to 1.5 and it's Miami, 2001? Or do I want to buy a 3.2 in the suburbs? And I believe that that's going to be a really stable cash flow for my retirement. We've still got some areas that are USDA eligible. And if you put almost nothing on the table because you buy a home as an owner occupant, you wait the 12 months, as Ricky's saying, and then you move to the next home, your return on that equity, if you will, or down payment, it's exponential because you have such little money on the table. And I speak from the management side here that if you're going to rent a place, people want some money. And those USDA loans are real good loans, good deals if you can get them. And so I'm going to run through all these options when you guys give Ricky a call because they're all on the table. But yes, if you're calling us from California, you live on the beach and you're like, hey, I'm not moving to the suburbs of Austin, but I want a real estate, that loan's probably not going to be eligible for you. But if you're getting started, if you're especially younger and you want to, you see where this is going to go in the future, you can do math on paper and you go, wow, if I just buy my first house, I get going, I can buy another house, we can move to that. I'm not going to take all that money and buy myself a Range Rover. I'm going to take that money and actually invest in my own future. Give Ricky a call. He'll sit down, work the math with you, and we're happy to do the same and support you guys. But there are ways into these investments, and you can come out of this okay. But you're going to have to make decisions besides going downtown for dinner every weekend as prices keep climbing every time. I feel old now. Every time I go out, I'm like, $200 for dinner. I can't do it anymore. I sound like my grandmother or something, but it seems to be the way everything's going. So let's talk about this a little bit. Outside factors affecting the Austin housing market. This is wide open, right? I mean, pick an article, any article. There's just so much to talk about. Give us your thoughts on this, and I'm kind of leaving it broad, but I mean, you can talk about anything, Ricky, from like economic to job growth to political to labor to housing. Don't leave out employers because I'm going to have to throw one in there if you leave out the big deal that's kind of close to my hometown. But tell us what you think about some of this.
Well, I know what you're referring to. I'm gonna let you. It's close to your hometown, so you're gonna have a lot of passion behind that. So that's the perfect ending to that segment. A big thing that we're seeing right now is that folks are actually moving out of Austin for a couple of reasons. One is because we've had some clients actually lose their job, and so they are moving to other locations. Interestingly enough, though, Matt, our first conversation with them isn't, hey, let's sell your property. It's, hey, how can we help you keep that property to create wealth? And what's interesting too is our past clients are so shocked that that's the first conversation we have. But if you truly work from a position of you want what's best for them and their wealth and their legacy, those are the conversations you start with. Another thing we're seeing a lot is work from home no longer. We sold so many properties a couple of years ago where people had jobs in other states, but they didn't have to go into the office. We've had multiple clients call us and mention to us that they have to go Tuesday, Wednesday, Thursday, or they have to go Monday through Friday, and they're being given anywhere from 3 to 6 months to make this transition, which is very quick. So what's happening, Matt, is this is creating additional inventory already to a market where inventory is at a 5-year high. Interest rates. Another thing I'm seeing that's leading to not a lot of properties actually going under contract is that, and these are conversations we're having every day, we have so many people that want to downsize, but then we run payments on a smaller home and the interest rates are so high that smaller home would be more expensive per month than the big home that they're in right now. And so that's actually locking up inventory. So you think that would help, but what's also happening is people are selling their home either or going under contract for a new property because they don't want that higher payment. And the same thing on people wanting to upsize. They just can't afford, because then you're getting a higher interest rate and you're getting a higher principal balance. So both of those are still increasing, leading to a decrease in sales and increase in inventory. Those are the things I'm seeing the most, especially that work from home. We've had a lot of people contact us that are relocating back to where their office is.
It's really been interesting to watch some of the employers. We have these major tech employers, and the concept was, oh, everybody's going to work remote. It's going to be great. And then they just changed their minds. It's kind of mind blowing, but everyone's having to deal with that. And Austin traffic is an issue. It's not Boston, but kind of refer to ourselves as Southeast or something. I don't cross the river. I personally love downtown, so I'll cross the river to go to downtown or close to campus or something. But people that live up north tend to have friends and stuff north and south. And so if you live across the city and you have to now traverse to get to Dell and go to work, it's a problem. And so I can feel you on what some of these folks are doing, but all this, as I see it circling, kind of comes back around. And it just smells like opportunity to me. If we can buy the rates down with whatever that looks like, even if it's just to get it palatable, right? Okay, it's not going to go back to 2.5. If you think you're getting 2.5, you're going to be. It's not going to happen, right? And so that was this anomaly. If you got it, great. If you didn't, it's too bad. But let's just talk reasonable. If you could get to 5, if you could get to 5, which I think we can, it's not bad, guys. You're going to be sitting at that 5 with a fixed rate loan. So you're going to have options as the future goes by. And do I want to refi? Do I want to buy it down? Do I not? Do I let it go? But as these people are moving or having to relocate, others can't move. I'm sensing opportunity in every one of those conversations, even if it's not, well, Austin's going to triple their inventory. Austin's never going to triple. Guys, there's nowhere else to build roads north and south. So we are, if you've looked at a graph, Texas A&M Real Estate Institute has Texas A&M, what do they call that? The real estate school at Texas A&M. Yeah, yeah. They've got some stats that you can dig up on the web, and they show the proximity to downtown and what prices do. That's going to increase because traffic's not going to subside. We're not building more homes in the city. It is what it is. And so I don't know. I smell opportunity all the way around with this. The thing we started off talking about was employers, and that was the one I wanted to throw in. I grew up in Taylor, Texas, which if you would have told me that anybody knew where that was 40 years ago, I would have never believed you. But one of the largest government projects in history, I want to say it's number 2 as far as building a work site is going on out there with Samsung, so that it will have chips in the future. There's a little bit of conflict going on around the world when it comes to computer chips, and we have to build them domestically. And that's the facility, the site that they've chosen. When you drive by there, you can't even count the number of cranes as you drive by. It's like nothing I've ever seen. Just about a mile from there is where the power is controlled in the state of Texas for the entire grid. Another 2 miles between those two, Amazon's putting in a plant with an entire rail yard. So there is so much development going up in that area. Okay, well, I don't have land in that area. What am I supposed to do? You're supposed to bet on them having employees up there. And Pflugerville, Hutto, some of those areas too. I got to tell you, there's still some land out there. There's still some new communities. Still may be able to get the USDA, but I won't swear to that out in Hutto. I'll let Ricky tackle that whenever you give him a call. But man, there's just so much opportunity around our area, and it's not going to go away anytime soon, regardless of which rabbit hole you go down on the internet. We're getting close to the end. I'm running a little long, Gabby, myself today, but let's talk about some areas worth consideration. I threw out Hutto and Pflugerville. I'm not offended at all if you poo-poo those areas. We all have opinions, and we all need to learn to respect each other's opinions. But what are you thinking, Ricky? What are your thoughts about areas around your area?
Well, a lot of it too, Matt, and you kind of alluded to it earlier on. It depends on your investment strategy. Are you going for cash flow because you want the income, or are you going for major appreciation? Usually, you don't get both on each property. There are some exceptions, but usually you're looking for one product or the other. The outerlying areas, like what you're mentioning, those are great opportunities usually to find cash flow. Whereas the areas that are going to be closer to town, you're betting on the appreciation, but you might be negative. And for some of our investors, the negative cash flow is actually a plus. They actually are looking for that and would rather have the appreciation, because the money they're able to save from a cost segregation analysis on their taxes far outweighs the value of being negative and gaining that appreciation. If anyone on this call or anyone listening to this doesn't understand the power of a cost segregation analysis on your investment properties and why you should be buying one every year and having this analysis done, call Matt or I and we can walk you through that. It's a huge tax savings, and the government has it because they want us to use it. So you need to use it and you need to learn more about it. So in terms of areas, 4-5, I've always really been big on 4-5. And here's the reason, Matt. Between 4-5 and 0-4, there's $1 million difference in average home price. It's the largest discrepancy for a bordering zip code without crossing an interstate within our market. So to give you perspective, in April, the average price in 78704, which would be downtown to Ben White, which is where our office is located, was 1.5 million. The average price in 78745 was between 500 and 600,000. So about $1 million difference between price points. So what happens, Matt, is people say, I can't afford to rent or own here, but this isn't that much further. I can still be close to downtown, but I'm okay driving 5 to 7 minutes more to pay $1 million less for that property. And so that's where we're really recommending for investors that are looking for cash or for appreciation for cash flow, the outerlying areas. It's going to be Hutto, it's going to be Manor, it's going to be Taylor, it's going to be Bastrop. A lot of those areas too are USD eligible, so those are great. Definitely those areas for cash flow. But also, it's not just about the area; it's about the product. Here's some great advice for investors looking for properties. You want to find the smallest home with the most amount of bedrooms on the smallest lot you can find. I always recommend looking for homes that are 2,000 feet, 4 bedrooms, and a small lot. Because here's the thing, Matt, when you buy a property, you're buying it mostly the values in the square footage and the lot size. Does it have a green belt? Is the lot really big? You're paying a premium for that. When people rent, they don't come to us saying, oh, well, I don't really care about the bedrooms, but I really want a large lot and a huge home. They're coming to us saying, here's the area I want, and here's how many bedrooms I need. So finding the smallest 4-bedroom home on the smallest lot is what we recommend. And we always recommend single family homes instead of condominiums for the most part. There are some exceptions, but for the most part, we recommend that due to the HOA fees that cut into cash flow. And having been in the market now for 18 years, I can tell you too that a single family home will appreciate a lot more than a condo in the same area. Condos tend to appreciate at about a third of the rate of a single family home over a 10-year trend analysis in the same area.
I love it. So the only thing I would add on to that is that I like 1-story homes because as the population ages, going upstairs is a little hard. But if you've got a large home on that lot, it may end up being 1-story as well. So not always, but if you can find it, I love the 1-story homes. The other thing is when I ran the numbers to support what Ricky's saying, years and years we've run the numbers, right? Is this a good investment, bad investment? The condo fees are almost always the spread between what turns it from good to bad. And it's nothing against condo associations or this and that, but that's the math, that's that gap. And you're paying for something, right? You're paying for common facilities, you're paying for exterior maintenance and all that. And those are things that you normally wouldn't have but once every 20, 30 years if you're residing in a home. And a $50,000 assessment, I hear, may be coming for a really nice complex downtown, and that's not uncommon. So most people get on those boards, and what they want to do is not spend money, and then something has to be done. And oh my goodness, now everybody has to pay $50,000. That's just kind of the nature of the humans, I think, more than any single event. It's just that's what people do is avoid these. So Ricky, I'm about to close this out today. We've reached the end of our 30 minutes. I cannot thank you enough for the great info you've shared with everybody. Also, just for being a good guy and being reputable and having integrity. I feel like in an election year, everybody's arguing about what that is. But those of us that are here, it means doing what you say and saying what you do and caring about the truth more than yourself. Sometimes you got to do what's right, even on the tough days, not just when it's easy. So I appreciate you guys. I appreciate your team. You guys are located in a great neighborhood in South Austin. If anybody wants to come by, have a cup of coffee with you, meet you. We still actually like to meet people at some point, shake hands and build relationships. So is there anything else we missed about you, your team, or anything that you wanted to share today?
No, the only other thing I would say is, in addition to helping people find a great investment, giving them the ins and outs. And by the way, Matt, my wife and I have this reputation of talking people out of buying real estate, not in general, but specific properties because there's so many things that go into finding a great investment. And a lot of investors come to us and they're so antsy to get something. And it's a process. You want to make sure you get the right house. So find an agent like me that's more motivated in helping you find the right house than just getting a commission and selling a house. Because let's be honest, sales are down. Agents are very anxious to get home sales. Who you work with now is more important than ever. No other thing I would say too is with us, our services don't just stop with helping you find that great investment and negotiating those three key elements in a contract. It goes well beyond the transaction with our client concierge program, our Cain's Club, our Cain's List, market reports, newsletters. The service doesn't end with the transaction.
I love that, man. Why can't we all just build relationships? That's part of being a community, right? Where people used to actually know each other. And so you had to do the right thing because you're going to see these people again. And I'm glad that we still get to share that concept and kind of live that instead of a fly by night. Am I correct in saying it's something like, is it, I'm sorry, I'm not on the sales side like you are, but it's 5 or 10% of the agents are doing like all the business and the rest are one transaction a year and don't even have a clue what's going on. Nothing against them. They're nice people, but is it, what was it? Is it 5 or 10%?
Well, the number I remember from 2023 was that 65% of our board sold less than two homes last year.
Yeah. It is something against
Yeah.
them, right? If you put it as a part-time job,
Yeah.
that's great. But for you as an investor, this is the one of the largest investments you'll ever make. So I don't know.
Yes.
I mean, I might take it seriously and actually go to someone that can help you beyond just closing the transaction if you're lucky. And
Well,
if
if
they
you
don't,
needed a heart surgery, Matt, would you go to the guy that did two surgeries last year or 120? And this isn't surgery for your health, but is surgery for your financial means and your legacy. So it's so important to have those partnerships, like you said. And I'll be honest, I love the fact that we know you in 1836 because in the past when we didn't have a great property management company to refer to, I wasn't excited about as working with investors as I am now. So thank you for that partnership as well.
yeah, I will tell everybody if you're a property manager, it's a matter of time before you get cursed because everything you do, not cursed like voodoo, but cursed like yelled at, everything you do creates a bill. And so no matter what, somebody goes, yeah, you should have done that anyway. And the other party goes, well, I'm not paying it. And I'm going to go online and tell everybody that you're the devil. We actually have it's not in this office, it's in the other one. Someone wrote us a voodoo poem on a check that they paid a fine with. We just framed it
Oh
because
my.
we're like, this epitomizes what we see on a daily basis. So do be aware, there's too many property managers in the business. We would love to have less. And those of us in the business with more integrity, but we don't get that choice. We just have to go out and sing for our supper every day and try to do the best we can. So I popped some stuff on the screen for Ricky's team. If you want to get a hold of him, that's all the contact information I think you'll need to get connected with those guys so that they can do whatever you need for them, even if it's just to say, hey, put me on your email list. Here are some contacts for us. You can always find us on our website as well. And we just appreciate you guys being with us today, loving Austin as much as we do. And if we can do anything for you, whether it's to join our groups, whether it's to see us at tailgating or some other event in Austin, please come up, speak to us, meet us, shake hands. That's what we're here to do is build relationships. And Ricky, thank you so much for your time today. We will see our viewers again soon and really appreciate your time.
Yes, thank you for having me. It's been a privilege.
Have a great day, guys. We'll see you soon at the next recording.